This lesson is the third of 13 slides of Part 3 of Introduction to Financial Statement Analysis. Here, you will learn the different types of financial statements. The first is the balance sheet, which reports assets, liabilities, and capital. Liabilities are debts or obligations, while capital is equity. The income statement reports profit or loss. The comprehensive income statement is the profit or loss we just mentioned, plus other changes in capital or equity, except for additional capital contributions or withdrawals and profit distributions, which are transactions with the owners of the company and reported under the equity statement. Then we have the cash flow statement, which is simply a listing of cash receipts and cash payments. This financial statement is what we studied previously as measuring a firm's cash performance. Finally, the equity statement reports on profit or loss, as well as the owner's transactions that are not reported on the comprehensive income statement previously mentioned, such as dividends or profit distributions and capital transactions. Let us work on the learning point exercises. The first is the IFRS names for the above financial statements. Here, we are to match the IFRS titles of financial statements on the left side to those on the right, which we just covered. This exercise is an example of how we at eCPD Academy do not enumerate learning points for you to remember or memorize, but instead let you learn it on your own by asking them in a question rather than presenting them as part of the lecture. Anyway, let us proceed. The first title bears the phrase financial position, so it refers to the balance sheet, which you learned earlier when we walked through the entire accounting process in the first lesson slide. The second title is easy, not only because we just explained this in the enumeration of financial statements, but also the words income and profit are synonymous in ordinary language. The third title bears a matching phrase comprehensive income, and so do the fourth and fifth titles with matching words cash flow and equity respectively. The of expressions are preferred IFRS convention, but the noun form of the word statement is equally acceptable. What about the US GAAP? It appears that the US GAAP convention uses a mix of these aforesaid titles. For example, income statement and statement of cash flows. Anyway, the question asks which of these statements report changes in owner's equity? Well, pretty easy because it uses the word equity. However, would companies be allowed to use other descriptive titles for these financial statements? Let us see whether using other titles is permitted. The question is a true or false statement, which asks just that, for statement of financial position and balance sheet. Both the IFRS and US GAAP expressly provide in their standards the answer to this question, and we at eCPD Academy could have just simply stated that as a lecture statement. However, we thought you'd learn more if you make you think like an accounting standard setter, and so I challenge you now to evaluate the impact of restricting titles to the given preferred forms. I'll let you think for a moment. Well, if you answered false, then you think like the members of the International Accounting Standards Board for IFRS Standards and Financial Accounting Standards Board or FASB for the US GAAP. We enumerated the types of financial statements. Do these or a subset of these constitute the complete financial statements? Let us find out under IFRS. Here, we are asked to identify which of the items would form a complete set of financial statements as specified under IFRS. Again, we at eCPD Academy could have simply enumerated them for you, but we believe you learn more if you put them together yourself, even if you have to guess, as you harness your evaluation skill, which results in you achieving higher learning. Now, take a moment to do so, and think whether each item below contributes useful and unique kind of information to the users of financial statements until you form a complete set of financial statements. The first four items are the financial statements we just discussed, so you would most likely drag them to the set, and so let us do that. Now, the last two may seem strange, but we rely on no more than your vocabulary skill. The fifth item for its use of the words comparative and prior period, and the last for the word notes. The fifth item means the same set of the four financial statements just added above to the set, but for the immediately preceding period. These you would think would provide comparative figures useful to analyze changes, so let's add it to the set. Without knowing the exact nature of the notes to financial statements, it being notes seems to suggest exploratory information to the financial statements. You would then think it would help you understand more the financial statements, that without it, the financial information may not be fully understandable. Therefore, it makes sense to add it, even though they're not exactly financial statements. Now, let us find out the answer. And of course you would say I led you to the correct answer, but not until you evaluate them yourself. Again, thinking like an accounting standard setter. What about under the US GAAP? We are presented with exactly the same items. Consider for a moment if FASB would likely constitute the same set as the IFRS is. If you can't think of a good reason for FASB to be different in what constitutes a complete set of financial statements, let us drag them all onto the set and then reveal the answer. And so we got it right. The next learning point elaborates on comparability of financial statements. The question stem asks us whether comparison must be made between periods of the same firm or between different firms or both. Well, this seems a practical question, as it is a more meaningful comparison to do both, and this should be the answer. Thus far, we just described the different types of financial statements. But what is the objective of financial statements? The question stem asks whether the financial statements provide users information for assessing either management accountability or cash flow prospects or both. Again, we at eCPD Academy could have simply stated this as a lecture note, but we know you would learn better if you evaluate them yourself. So pause for a bit and decide your answer. Ready? Let's check the answer. Well done if you pick both choices. However, if you did not pick management stewardship, you would have been right before the 2018 IFRS conceptual framework. Now, let us try the next learning point, which pertains to the purpose of financial statements. The exercise is a fill in the box with a word or phrase that would give sense to the entire sentence. The question is a bit difficult without you being taught explicitly, without you reading the relevant accounting standards. But try nonetheless. Just bear in mind that the learning point pertains to the purpose of financial statements, and know that the users mentioned cannot require financial statements tailored to their needs, and that the answer consists of two words. Pause and consider possible answers. Your possibilities may have used purpose and the phrase not tailored. So what about an answer phrase, general purpose? Let us try that, shall we? Well, while I just led you to the answer, I hope I helped you tap into your analytical and evaluation skills to think of the correct answer. These higher order learning skills are what we at eCPD Academy would like you to develop. We just talked about users of financial statements. The next learning point is about primary users. The question asks which are considered primary users. Pause and evaluate the choices. You learned in earlier lessons that financial statements serve the needs of both investors and creditors, but the choices split them into existing and potential. Existing investors and creditors definitely would be primary users. What about potential investors and creditors? Well, it seems appropriate to consider them primary users if companies would like to attract new investors and creditors, so let us pick them too. What about suppliers, customers, and employees? There are several reasons why they could be interested in the financial statement of the company for doing business with it or working for it. However, their needs for useful information may not be primary to the company, so let us leave this choice unselected. Now, let us reveal the answer. I led you to the correct answer, but we went through the analysis and evaluation together. As before, we would rather you exercise your judgment and retain your learning for longer, rather than memorize learning points and forget them later. The next learning point is about uses of financial statements. Consider the question and the choices, although only the first two actually pertains to uses. The choice of showing the value of the firm sounds definitive too much. Let us leave it unselected. As you know, we need to consider carefully any choice mentioning all, which seems too much in this context, as there may be other information that users need but the financial statements cannot provide or provide insufficiently. The last choice suggests that financial reports include financial statements and that there are other types of financial reports. We know this is true because we learned it earlier in part 1 of this course. Let us check the answer. The answer note emphasizes that financial statements only help to estimate the value of the firm. The In Practice section is our instruction design at eCPD Academy to incorporate immediate real-world application of your learning. There are many of them in all of our courses on ecpd-academy.com, as they are a core feature of our instruction design. Let us follow the links. The first is a link to the URL to the investor page of Rolls-Royce and the other of Bank of America, where both publish their financial statements. The URL being named with investors in it emphasizes that investors are indeed primary users of financial statements. That concludes our discussion of the overview of the different types of financial statements. We will get to know more of each of these financial statements in succeeding videos. Let us move on to the next slide.